Hi everyone, Leah the trader here. This is a little webinar I want to do on position trading and on the market. It is created for traders to help them not oversize and buy the dip of wrong companies in the wrong time, or I would say more in the wrong time. So let's look at everything, starting with the market, then we look at certain stages of the market, and then how do I do personally position trading. As you can see, I started selling off on Friday, which was expected. We breaked out from the all-time high from the previous strong resistance about 2 weeks ago, and we were grinding higher the whole July without a significant pullback, right? So last time we touched the 20 moving average was in June, and the 50 moving average last time we were there was in May 1st. So pretty long time in a beautiful uptrend. It's natural that the market will want to retest and have a pullback. Plus, we are getting into September, October, which is a very weak time of the year. September is the weakest month with the worst performance of the year. History rhymes, doesn't have to repeat, but we want to be ready because everything is aligning towards the pullback, especially with getting all-time high and this historic rally that we had since April. Let's look at stages of market, because oftentimes people ruin their portfolios by buying the dip. Buying the dip is a great technique when you are in an uptrend, right? When you're in a beautiful uptrend on a stock that has clear path going higher. The issue happens when people fail to recognize that the stock is entering stage 4 and they are buying the dips. Issue with stage 4, Lineage, for example, I'm going to talk about it because at this point this is an extremely controversial stock and it triggers many on internet and social media. God forbid you say something against it or for it. You can't go right. I will still talk about it because it's a beautiful example. I use it for educational purpose now. If I'm long or short or what the heck I do. The 50 moving average went below 200 and the 200 went below on end of January was the time to get out of this position, because you can clearly see that this stock was in this phase of distribution for a while. Of course, it had wild moves there, and here we had a phase of distribution for a while. This is for 4 months. People were taking profits. It's the stage 3, and then it entered clear stage 4. Now it's just falling. And the problem with stage 4 is if you buy the dips, that's a horrible strategy to have because the stock might be falling for a long time. As you can see, we are in this ugly downtrend. We already started the downtrend here in December, but we still didn't have the moving averages to confirm that. But if you were an investor, you were there long term, the best was to get out in January. So that means that the stock has been selling off for 7 months now, right? 6 months. And this can go for longer. We are breaking all the supports, right? These were huge demand zones that did not hold at all. This was a demand zone for a long time, was holding there, and look, this it completely broke. It didn't even pay attention there for a while. Issue with stage 4, it can take a very long time, and you keep buying the dips, the dip keeps dipping, and then boom, you don't have money left. And then now you're sitting on a huge oversized position, and you don't have money left, and now it might go lower, and then it might take years to recover. And it can go higher for those who buy it there, but it might only go up to $250 or $300, but your average is $360. So you're going to wait. You might wait for years. It's a huge opportunity cost. You don't want to do it. Recognize, number one, you want to buy the dip of companies and ETFs or assets that are in uptrend. They're here. This is time to buy the dip. Boom, boom. When you reach the 10, 20, the 50 even sometimes, and you keep going higher. You have your stop right below. If it doesn't hold, you're out, right? That's when you buy the dip. We can look at GE, for example. This is a beautiful uptrend, right? From here on, the stock just started going higher. That was in January 23. We have an uptrend. You can buy a dip on those. When the stock on daily or even weekly, when this goes higher and you have a little bit of weakness, for example, here, you buy the dip. Here you buy the dip, right? You can buy the dip here also. So that's when you buy the dip. You're not buying the dips when the stock is falling. Here the same. You are still about the 200. This is a nice buy the dip opportunity, right? The moment you see this maybe not because you're breaking, long, but you're still in an uptrend. That's what I'm trying to say. The moving averages are still on long-term aligned. That's a buy at a dip opportunity here. All right, not when the stock truly spends months in the distribution phase. People are taking profits, very undeciding, and then it starts breaking. The moving averages are then almost horizontal, and then it breaks. That's a stage 4 week off model. Please check it out. You are out. That's not when you buy the dip. Then what you do, you can short, which is a great idea to short in stage 4. Or if you don't feel comfortable shorting and you think that company is having a dip, you need to understand the valuation, you need to see the trend, and you need to wait. And wait as much as you can, because stage 4 is, as I said, takes a very long time. And now what you do, position trading. You can tell yourself, okay, my investment portfolio is, because at this point you're talking about investment. If you want to trade, you go short. You're not talking about in trade to go long. You can play the bounce, the reversal, which is like what we played here. And it made a lot of money because we bought at 250 or 260 and we got out at 300. That's a bounce play, which have much lower probability of success than breakouts. Remember that. Because again, the dip never stopped dipping. So that's the problem there. But if you want to invest, which in this case, these people on X and everywhere, they are talking about investments or position trade, which is also months long. You tell yourself, okay, I have $100,000 portfolio or 200,000. I do not want to spend 10% of my portfolio in one stock. All right, that's what I do. Of course, if I have 20 stock, I can do that too. But I don't want to put half of my portfolio in one stock. You would have to have insane confirmation and know things that other people don't know to invest as much. So you say, I want to spend $10,000 on UNH or $20,000 on UNH, and I'm going to start buying when UNH gets to certain levels. At this point, you look at the weekly chart, which is also, it's completely horrendous at this point. At this point, you can even look at month chart. I don't even know if you're going to see something. So yeah, you do. So for example, it starts selling off up here. You say, I'm going to buy a little bit at the 100 on monthly or whatever that is on weekly. Okay, let's look at the weekly chart again. Because now we're at this point, it's like, whoa. So you can buy, okay, when we get to this level, I will buy 10%, okay, of this. So from $20,000, you just buy for 2K. And I don't know which for, trust me, you're going to appreciate this strategy. Then you say, if we get lower and we reach a level from like here, okay, so first draw your lines. You have first support here, which might align with moving averages. At this point, it doesn't. You have another support here. Then you have another support right here. And now you have another support right here. So basically, you buy 10% here, 20% here, 30% here, 40% here. All right? And that's your strategy, because that way you're getting into those on stage 4. You're going to have much better assigning price if you're going to be pyramiding in this way. So now you would have 10, 20, 30, 60% allocation. You still have cash left if it goes lower. And now you wait. Your last level would be 200, all right? Or COVID low, like 197. You can even do that to be safe. And then you have 40%. It might not get there, but it's okay. I'd rather be safe than sorry. You still have done, if it turns course now, you still have 60% allocation. And then you look at your average, it's going to be much nicer than if you YOLO here a lot and then shit, it's still going lower. Most people do the opposite. They buy a lot here and then, oh no, let me buy 100 shares here, let me do 50 shares here, and let me do 10%, 10 shares here, and then they're buying 5%, 5 shares like stupid, ugly average. So that's not what you want to do, right? So this is what you want to do pretty much on the assignment, okay? So that's all I wanted to talk about. Be careful now. We might have a little bit of SPY weakness, which would be great. I would love SPY to go down here, 580. What I like, nobody cares about, especially not the market. But I'm saying it would be a wonderful, wonderful retest. But if you look at the months here, SPY can totally do it. Like look, last year we sold off how much? 10% almost, and then another month we got the double top, double bottom. Here is another September last year, 2 years ago, was also really ugly. We started selling on 31st of July, so now was October 1st, and we went down also almost 10%. So guys, this is totally fine if we go down 10%, my friends. And if you look at the SPY, 10% would bring us exactly to around that breaking up right here. All right, so don't think it's that low. It can happen very fast. And then be careful, because your high beta stocks that are free for beta, all these crazy companies that you're buying right now, and all these stocks, they are unprofitable, are going to be down a lot, 30-40% easily. Like UBTS just broke down. This can go down 50% in no time. So that's it. Leah, the trader here again from TMAT, Trading Mindset and Data. If you like this content, please like the video, follow us. We do a lot of work. We try to educate the community. I'm mainly focusing on risk management. That's my cup of tea. And yeah, we have also Discord, where we are doing a lot of data and research every day, and we trade together with our members. It's a very unique place. So you can join us, and have a great day. Bye.